Have you ever wondered what really pulls the strings behind the rise and fall of great empires? It's not just armies or leaders. It's something we use every day. Money, and more specifically, the banks that control its flow. Welcome, and today we're diving deep into the powerful double-edged sword of finance and how it has shaped nations throughout history. From the grand empires of the past to the global economy of today, banking has been the silent architect, the hidden force driving progress and at times orchestrating collapse. Let's start at the beginning. Long before digital transfers and credit cards, the concept of banking began with goldsmiths in the 17th century. People would deposit their gold with them for safekeeping, and in return they received a receipt. Soon, these receipts started being traded as a form of money because everyone knew they were backed by real gold. This was the birth of fractional reserve banking. The goldsmiths realized they could lend out a portion of the gold they held, earning interest and creating new money in the process. This simple innovation was revolutionary. It meant that savings could be turned into investment, fueling businesses, trade, and exploration. This new power of credit became the engine of empire. Think about the Dutch Republic in the 17th century. The Bank of Amsterdam, founded in 1609, stabilized the currency and provided reliable credit, turning a small nation into a global trading powerhouse. Or consider the British Empire. The establishment of the Bank of England in 1694 was a game changer. It financed the government's debts and funded the Royal Navy, which in turn protected and expanded Britain's vast colonial trade routes. Nations with sophisticated banking systems could fund wars, build massive infrastructure projects, and outcompete their rivals. Banking wasn't just about storing money, it was about creating national power. So how exactly does this work? At its core, banking is about financial intermediation. Banks take deposits from people who have extra money and lend it to those who need it, whether it's a family buying a home, a startup launching a new product, or a government building a new highway. This process allocates capital to its most productive uses, driving economic growth. National banks also play a crucial role as regulators, ensuring the stability of the financial system, controlling inflation, and acting as a lender of last resort to prevent bank runs. The fees we pay for these services, while sometimes annoying, are what sustain this vital ecosystem. But this system has a dark side. The very same mechanisms that create prosperity can also lead to catastrophic failure. When banks lend too recklessly, when speculative bubbles get out of control, or when trust evaporates, the entire system can come crashing down. History is littered with financial crises that have shaken nations to their core. The most infamous, of course, is the Great Depression of the 1930s. It started with a stock market crash in the United States, but it triggered a wave of bank failures. As banks collapsed, credit dried up, businesses went bankrupt, and unemployment skyrocketed. The crisis spread like a virus across the globe, revealing just how interconnected the world's financial systems had become. The lessons from the Great Depression led to new regulations, like deposit insurance, designed to prevent such a systemic collapse from happening again. But financial crises are a recurring nightmare. The 1997 Asian financial crisis showed how quickly international investment could flee a country, devastating economies that had seemed robust just months before. And who could forget the 2008 global financial crisis? It was triggered by risky mortgage lending in the US, but quickly spiraled into a global meltdown, freezing credit markets and pushing the world into a deep recession. Each crisis teaches us a painful lesson. The global financial system is a tightly woven fabric, and a tear in one corner can unravel the whole thing. These events underscore the constant need for vigilance, robust regulation, and international cooperation to manage the inherent risks of banking. Now, we're in the midst of another revolution, the digital age. The evolution from gold to digital currency has been astonishing. Technology is completely reshaping our relationship with money. Online banking, mobile payments, and peer-to-peer lending platforms are making financial services more accessible and efficient than ever before. We can now send money across the world in seconds, invest with a few taps on our phone, and get a loan without ever stepping foot inside a bank. This has been a massive shift, moving banking from a physical, local experience to a global, digital one. This technological leap has also given rise to new players. Non-banking financial institutions, or fintech companies, are challenging the traditional dominance of banks. They are innovating in areas like lending, payments, and wealth management, often offering more user-friendly and lower-cost alternatives. This competition is forcing traditional banks to adapt and innovate, which is ultimately good for consumers. However, it also presents new challenges for regulators. How do you oversee a decentralized global financial system that operates largely online? How do you protect consumers and maintain stability when new financial products are being created every day? These are the critical questions our generation must answer. So, what have we learned? Banking is a powerful force for good, channeling savings into productive investments that build our modern world. It has financed everything from railroads and factories to the tech giants of today. It has funded governments, enabled global trade, and lifted billions of people out of poverty. But it's a force that must be handled with extreme care. The history of banking is also a history of bubbles, panics, and devastating crises that have wiped out fortunes and set back human progress. The story of finance is the story of a constant struggle between innovation and regulation, between risk and stability. As we move further into the digital age with the rise of cryptocurrencies and decentralized finance, this story is far from over. The fundamental principles remain the same, but the tools and the risks are evolving faster than ever. Understanding this history, the triumphs and the failures, is essential if we want to build a more stable and prosperous future for everyone. It reminds us that money isn't just an abstract concept. It's a powerful tool that has shaped and will continue to shape the destiny of nations. Thank you so much for joining me on this journey through the history of finance. If you found this interesting, please hit that like button and subscribe for more deep dives into the forces that shape our world. We'd love to hear your thoughts in the comments below. See you next time.